Tesla stock really hurt the shorts with this one. The stock was up 6.22% today in regular trading, up almost 1% here in after hours. Tesla stock is back officially above $200 per share. Here in this video, we will discuss what is coming next for Tesla and why I believe Tesla stock still has quite a bit to run here. I've been calling for this rally for a while, so congratulations to you guys that hit this on the head. We have SMCI that is literally ripping the faces off of short sellers, now over $1,000 per share. We'll touch on this and what kind of correlation these AI stocks have to Tesla. And last but not least, we do have big economic data coming out tomorrow that will move our markets. So ladies and gentlemen, thank you for joining me today. I hope you're ready for a jam-packed video. If you are not, you better get ready or click off the video right now because we are locked and loaded and jumping straight into it. First up, before we get into what's going on with Tesla and where I think Tesla stock is going next, and if you guys have been a viewer of this channel for a while, then you probably have a good idea. So far, so good. We do have a little bit of Tesla stock news to go over. Tesla apparently has been forced to delay deliveries of the Model S dual motor all-wheel drive and Model Y performance in the United States. Tesla instituted the delivery pause at the request of the EPA due to potential issues with the two vehicles' range figures. Good news is the Model Y performance and the Model S dual motor all-wheel drive, they're not the most popular variants, but still, the Model Y performance, that could definitely hurt numbers at least a little bit if this is a prolonged delay. But for Tesla stock investors, well, that doesn't seem to be affecting Tesla stock at all today. In fact, Tesla stock rose and then just continued to rise throughout the entirety of the day today. Adam Jonas released a new note on Tesla stock today. He says, Trojan EV, Tesla, Mexico, and China. Quote, the US wants EVs, but EV supply relies on China. China wants export markets, but confronts a rise in protectionism. Elon Musk wants cheaper EVs. That's worded weird. So do consumers. People basically want cheaper EVs, of course, right? That's an obvious. But you need China for that. Mexico is in a powerful position to broker a westernized China-based EV supply chain. This could be one of many other great things that are really overlooked by investors in Tesla, by analysts in Tesla as well. That could help push down vehicle prices, which could then create more sales for Tesla, more penetration, more conversions from ICE vehicles to pure EVs over time. It's not going to happen tomorrow. I know when SMCI is going up friggin' 250% in a month, yeah, you want some instant gratification. It's human nature. And side note, I feel horrible for these short sellers that are shorting this stock. Shoo-hoo. Yeah, that's gotta hurt. You're in a full-blown short squeeze at this point. But nonetheless, in due time, the markets will realize, wow, Tesla is really, elevating their business and putting themselves in a place to be successful. Option activity from hedge funds and institutions today was pretty neutral, believe that or not. You had 1,363 orders totaling $646 million with a positive order value of 51%. One thing that certainly helped Tesla stock rally over 7%, including this move in after hours, is the aggressive short positioning we have seen lately. The trade has been for a while now. Short Tesla, buy AI, or just buy big tech, but short Tesla. You can't miss out on that opportunity, right? That's what we've been faced with as Tesla stock has went from $265 down to $175 at the low. That has not been collectively, in my opinion, a lot of retail investors selling. Sure, is there obviously going to be selling from retail investors? Of course there is. But a lot of that, I believe, was short positions being added to in Tesla. And we can see that on a day-by-day basis. When you get those cost to borrow fees that are 10% plus, that shows a lot of demand to short Tesla stock. And Tesla's cost to borrow fees have been 5 to 10% for, most days over the last couple of weeks. Now, the short interest percentage of free flow is 3.28%. That might sound like a small amount, but what's actually important is the dollar amount that's currently sold short. So Tesla has $17.12 billion in short positions in the stock. So after a day like today, short sellers are losing over $1 billion. I have to imagine if the stock's up 7% today, then some shorts covering on short positions mixed with this FOMO atmosphere we have, well, that can lead Tesla stock to go higher. As I also explained in the last video, I do believe this AI bubble, let's be honest, it's a bubble. When it comes tumbling down, you do not want to be on the long side of that bubble. It could take years to get you your money back. Like an SMCI, it's $1,000 right now. It could fall to 300 again. How long is it going to take to get back to 1,000? A very long time. All you really need is a growth scare to get that bubble to actually pop. And don't be confused. It is a bubble, and analysts are chasing it like I have not seen in a very long time. But with that being said, what has happened over the past couple of months? Money has went from, I explained this in the last video, you have the upper end quadrant, that is your big tech names, your bulletproof companies, your $1 trillion+ companies. I wouldn't put Tesla in that higher end quadrant. I would put Google, I would put Microsoft, I would put Amazon, I would put Nvidia at this point. I would put those kind of stocks up there. Only a handful or two of them. The second tier quadrant is like Tesla, PayPal, these other names that are not these high flyers right now, but still profitable, good companies. Companies that, I want to be investing in relative to the upper end quadrant. And then you have the lower end quadrant that is like Fubo, that is like other smaller name kind of companies. Well, what's happened over the past couple of months is the bottom and the mid quadrants have been getting sucked, drained of liquidity almost on a day-by-day basis. And that money has went into the higher end quadrant. There's justifiable reasons to why this has been happening. Rate cuts getting pushed out. If we are going into a recession at some point in 2024, you would rather own like a Microsoft than small cap stock, or even a Tesla for that matter. But we don't have any money coming into our markets. So that liquidity drain is not being replenished by money coming into our markets. Like 2021, for an example. You had everyone throwing their money into stocks. People were just learning about the stock market for the first time in their whole entire lives. And what were they doing? They were throwing thousands of dollars into markets, and you couldn't get 4 or 5% on the yield curve buying treasuries. So what'd you have to do? You had to buy stocks. There was literally no other choice. There used to be this saying called TINA. It might come back again. There is no other alternative. That's what people used to say back in 2020 and 2021. And that's how a lot of people would justify super ridiculously high valuations for companies that were unprofitable, that had questionable business models and questionable futures. Long story short, Tesla has been a big loser in this. Tesla's lost $200 billion in market cap. So Tesla is, let's just call it 4 times the value of 8 times the value, 12 times the value of PayPal, right? A stupid high, market cap Tesla has relative to the other stocks that are in the mid or the low quadrant. So Tesla has really seen the money drain out of it. And it's really went into Nvidia, these other names. Nvidia was down about 1.7% today, and that did help fuel more money to go into Tesla stock. Believe it or not, over the past couple of weeks, every day Nvidia has been red, Tesla has been green. Every single day. Most notably on February 6th, when Nvidia was down 4%, at one point during the day, still closed down about 1.6%. Tesla was up 2.2%. Now look at today. Nvidia was down 1.7%. Tesla was up 7%. There is a very clear and obvious rotation that is taking place. Sometimes money's going into Tesla, sometimes money's leaving Tesla. I do think ultimately there's one conclusion that we can draw. This relationship will fuel a lot more upside for Tesla stock. Let me just tell you right now, the SMCI bubble will not last. The Nvidia bubble will not last. You have the law of large numbers really affecting Nvidia. Like Nvidia went from $7 billion of revenue, a year ago, during a year ago's quarter. Now they're going to be at 20 billion. 20.2 billion is where analysts are currently estimating. Even if they raise guidance to, 25 or even $30 billion, that's only like 15 to 30% growth. That's not hundreds of percents of growth that maybe some people in the markets are expecting. So the law of large numbers really going to start working against Nvidia. Now, SMCI is in a whole different category because SMCI is going through a short squeeze. Nvidia is not, but that's kind of having the same effect here, right? SMCI, you could even argue, maybe pulling money from Nvidia into the stock, because if you were long Nvidia, short SMCI, which seemed like a pretty logical trade when these stocks were, kind of matched up in price, just because, hey, if Nvidia is going to do good, well, SMCI is probably not going to do as good. If Nvidia does bad, SMCI is probably going to do worse, right? That makes sense as a logical trade. Now you're seeing the opposite happening. I've never seen a stock with an RSI of 96.79. That is literally unheard of. Like, you cannot make an argument here. This is a full-blown short squeeze. Usually short squeezes end poorly. So I'm more constructive on Nvidia, given it's not going through a short squeeze. But still, Nvidia is likely to fall next week when they report their earnings. This is not rocket science. Nvidia has fallen every time they have reported earnings, the last 3 earnings. Not necessarily the day after. Last earnings, Nvidia fell 2.5% the day after. Big whoop. No big deal. But over the next, 4 to 8 weeks following Nvidia's earnings, the stock tends to sell off. Now, if we're seeing this relationship with AI and Tesla, just call it AI, really Nvidia, SMCI, Tesla, but really Nvidia and Tesla if you want to get more specific, then if Nvidia sells off, that should be really good for Tesla. And that should pull money from the higher end quadrant, really Nvidia again, into the lower end quadrants. And a big beneficiary of that will likely be Tesla. Now, we will go over the short interest data for SMCI coming at the end of this video. So if you're curious on just how bad shorts are taking it right now, well, I'll provide that info, but later on in the video. Now, there's 2 other things today that helped Tesla stock, one of which was retail sales coming in negative 0.8% month over month, and last month's number being revised from positive 0.6% to 0.4%. So last month wasn't as strong as we thought, and December wasn't as strong as we thought, and January, was a lot weaker than we thought it was going to be. Estimates were negative 0.1, so that was like a 3 standard deviation miss on retail sales. But nobody was expecting almost a 1% negative month over month retail sales number. So what does that mean? Well, the Fed probably doesn't need to stay higher for longer. The Fed can probably cut rates a lot sooner than markets expect. Even though you didn't see much change there, the markets are still pricing in the first rate cut in June as they were before. If you start to get weaker inflation data, you've heard a lot of talk that January is just seasonally a strong CPI report, which is true. Some companies do their yearly price increase, at the start of a new calendar. But if inflation starts to actually trend downwards again, the economy continues to kind of roll with what we've seen today, and the economy's, getting worse, then that could be very good for interest rate sensitive names as well. So mix in AI potentially rolling over here in the next week to 2 weeks, and data supporting the Fed should be cutting rates soon. That's a recipe for a boom in Tesla stock. And the last thing that was affecting Tesla stock today was, it's not even a rumor. It's confirmed to not be true, but TipRanks picked it up, Business Insider, CNBC, literally everyone was talking about it, how Elon bought more Tesla stock. Elon did not buy more Tesla stock. It seems like the algos were pinned to those 13F filings, and they seen Elon owns 20.5% of Tesla, including his unvested options, and they just ran with it. Now, I initially got this wrong as well. I made a couple posts on X talking about Elon upped his position. In fact, he did not, but that's kind of like Lyft, right? We just hit 900% on Lyft earnings trades, calls the upside. That would have been a lot better, right? But Lyft, they messed up in their report. They said they expected margins to improve 500 basis points, which would be 5% in 2024, when they really just added an extra 0 on accident. So they only expect margins to go up half of 1% in 2024. But look, the stock was up 65%, was still up 35% yesterday, and was up another almost 20% today. So even an error can well, positively affect a stock. Once the algos really get a hold of it, that's game over. And let's be honest, this market is like 95% algos at this point. Like, nobody's buying SMCI right now. The only people that are buying SMCI when the stock's $1,000 per share are shorts covering and algos. They're like circle jerking each other around, a stock that's went up almost 300% in a month. It's a very dangerous situation. That's why I'm specifically calling this one out, because once this thing bursts, if you have positions in SMCI, you are going to get smoked with certainty. I'm not a financial advisor. This stock could go higher, obviously, but inevitably the stock will get smoked, and you may not make your money back for a very long time. Considering there's a lot better places, in my personal opinion, to put your money for years. Imagine if you are down in your position in SMCI for years. I think Tesla would be a very good place to put my money, at least personally, for the next couple of years, rather than let it sit in SMCI and essentially die once the stock does collapse. Now, SMCI is up 3.34% here in after hours. Nvidia is up 0.5%. This is followed by AMAT, Applied Materials, that reported earnings. They are a semiconductor company. They beat top, bottom. They gave you a good raise, good guidance. The stock is up 11.22% in after hours. It was pricing in about 5%. We did have some calls on this. So as long as this holds heading into tomorrow, congratulations to the trading community. That should be another one in the bag. Should be a very good trade. But yeah, this is causing a little bit more hype for AI stocks, at least here in after hours trading. Now, coming tomorrow morning, we will get building permits for the month of January. Last month, you had 1.493 million. This month, you're expecting 1.509 million. A little bit more building permits. Think about it like this: more building permits, the more potential building, the more potential housing, the less potential housing inflation. We have to acknowledge it at some point, but there's been a lot of immigration into this country over the past couple of years. Those people need housing. So that's why housing is so expensive, or at least that is a big reason why housing is so expensive. Back in 2019, real estate prices actually came down, right? Around the time I bought a house, real estate prices had come down about 10%. That was about January of 2019. That really hasn't happened on a broad scale ever since then. And a lot of it probably has to do with the immigration. Now, tomorrow, your big data will be PPI month over month for the month of January. Last month, you were negative 0.1%. These numbers are going to be revised again, so who knows? You might go more negative. You might go, way positive. We'll have to wait and see. For January, tomorrow's data report, you're expecting 0.1%. Now, the question in my mind is, does the Red Sea debacle, does containerized freight prices actually lead into rising PPI? Now, CPI is consumer price index or consumer price inflation, whatever way you want to think about it is perfectly fine. And PPI is producer price index or producer price inflation. So it's like a Clorox. Are their costs going up to make their Clorox products? Is this chair, whoever makes this chair, are their costs going up to make their products? Freaking Starbucks or what have you. That is PPI. So if their costs are going up, that usually leads into CPI, right? So PPI can lead into CPI, usually not CPI leading into PPI, but that is, always a possibility as well. So if those numbers come in docile tomorrow, negative or in line with expectations, I would expect stocks can do well on that. A lot of other data as well will be coming out at 10 o'clock in the morning. We will get Michigan consumer sentiment. You're expecting 80 for the headline number. Last month was 79, so a little bit better there. It's really going to come down to the 5-year and 1-year inflation expectations. 5-year inflation expectations expected at 2.9%. Last reading we got was 2.9%, so no change there. Michigan consumer expectations expected to actually decrease from 77.1 to 76.5, and Michigan current conditions are expected to fall from 81.9 to 82. 1 year ahead inflation expectations expected to come down from 2.9% last month to 2.8%. If inflation expectations come down, that's probably the thing people are going to take away from this the most. But the last reading we got here last month was the biggest boost to consumer sentiment that we had seen in a very long time. Consumer sentiment used to be a lot higher, would regularly hit 100, even a little bit higher than that at some points. But you've really been in a slump for a while. This had a lot of people excited when that number did come out last time. So if that goes higher, that's going to be good. But at 9:15 in the morning tomorrow, you are going to get Fed Barr that will be speaking. He does a lot of like bank policy talk. He usually doesn't talk about monetary policy at all. Fed Daily will be speaking at 12:10 p.m. around lunchtime tomorrow, and she does talk mostly about monetary policy and inflation. So she will be the Fed speaker to be watching for. Overall, PPI is a very important data report, and that will be coming out tomorrow. And I do expect it will move stocks. Now, I do believe coming next week and the week after that, so the week of, February 23rd, and then the week of March 1st, and then the week of March 8th, your next really 3 weeks of trading are going to be very important for Tesla. I do believe the AI trade is going to give up and those stocks will start to fall. If not, any time now, SMCI could crater like a rock. It is time for them to do a capital raise too. They're crazy if they're not raising capital right now. Like I said in the last video, you guys would hate me because if I was SMCI CEO, I would be raising capital literally right now. The announcement would be coming out in after hours that we're looking to raise capital. I don't care what happens to the stock. It's went up almost 300% in a month. Nonetheless, when you do see a give back of your AI semiconductor names, that's going to really help Tesla. I think it could happen before NVIDIA reports earnings next Wednesday, but for sure, in my personal opinion, afterwards. It really doesn't even matter what NVIDIA says at this point. They're probably not going to be able to shock everyone since the expectations are so high. UBS expects them to beat revenue by $3 billion and to raise guidance to 25 to 26 billion. They're going to have to come in with like a guide of $30 billion next quarter, which seems unlikely in my personal opinion. So with that being said, I have been very bullish on Tesla, and I do think we have the gap to fill around 210. But at that point, you might start to see more shorts covering on short positions, and if I am correct, semiconductor companies start to actually fall and capital starts to disperse back into the mid or the lower quadrants. I think a lot of that kind of like a powerful magnet, right? You got a powerful magnet right here, that's Tesla. Bridge magnets, right? So a lot of that money is going to gravitate towards Tesla because it's used to be your Magnificent Seven stock. Nothing has really changed fundamentally with Tesla. People have just gotten overly pessimistic for, honestly, no reason at all. So I think a lot of money is going to head back into Tesla. That could propel Tesla back into the 215s, 220s. I have a hard time grappling with higher than about 225 just because that would be a very aggressive short-term run, but Tesla usually bounces about 30 to 40% after it gets oversold on the RSI. So if we count from the 175 low, which was very brief, so normally I wouldn't do it like that. I would usually count it by the support at around 180, but 30% higher from here or from the 175 low would put the stock at about $228.48 per share. I think that's a pretty reasonable level that we could hit in the not so distant future. That also is exactly where your 100-day moving average is. So a 30% retracement from the ultimate low, is right about where I think is reasonable and probably where Tesla stock should have been priced this entire time. So decent amount of upside still here. I think that occurs over the next 2 to 4 weeks or so. And then who knows what happens after that. Data will definitely dictate the rest. Now, do I think Tesla's going to fall from here? Absolutely not. I've been saying it was very unlikely. If we do, we're falling to about 170. You got the gap to fill down there, but at this point, that doesn't look very likely in my personal opinion. Even if PPI comes in really high, it's probably not going to cause a massive sell-off in our markets. That's just the honest truth. But PPI is pretty closely correlated to PCE, which is the Fed's preferred measure of inflation. So really, anything can happen. Nonetheless, let me know what you think about this information down below in the comment section. Now, it's actually interesting when I look at stock twits now that we are through the day today and Tesla stock was up about 7%. The sentiment is still neutral at 53, which is better than yesterday when you were bearish at 34. Message volume at 62, better than yesterday's number at 48, but still pretty low. And the participation ratio at 54, which is higher than it has been, but still on the low side. very strange that you're not seeing more positivity over here on some of your arbitrage kind of sentiment reads. Now, who's number one? You probably guessed it. SMCI, which is just off the chain, insane at this moment in time. And actually what's funny here is the sentiment is getting way more bearish on the stock. The sentiment is at 10 out of 100. Considering the stock is up 17% today, you would expect a lot worse or a lot better sentiment, right? Just given how much the stock has been rallying. I do think this is a full-blown short squeeze at this moment in time. I really don't think a lot of people are betting on this thing to go higher. I just think shorts are in a really rough spot right now, and they are getting completely squashed on their short position. And the reason Supermicro is trading higher today is B of A Securities came out and said that Supermicro's going to see likely 50% revenue growth for the next 3 years, and they set their price target on $1,040 per share. Well, the stock's basically there now in after hours. So yeah, it's just literally ripping shorts' faces off at this moment in time. Now, the short interest percentage of free float at 11.61%. So the stock is heavily shorted, but it's actually the loss here that matters. The loss back on, let's call it January 4th, was 1.34 billion, or not the loss, but the dollar amount that was sold short. Now it's 4.86 billion, and the short interest has done nothing but increase. So maybe the last, couple of days shorts have started to cover. At least that would be my opinion. They're still looking at over $3 billion worth of losses, which not so long ago the whole company was worth, $3 or so billion. It's just been an absolute madhouse. Now, if you take a look at the option activity in this stock, I do think, again, there is a potential with some of the puts. Some of the puts could be pretty attractive when this thing does ultimately collapse, but lots of call activity as well from institutional investors that is also pushing the stock higher, like $1,000 strikes expiring tomorrow. $432,000. They're trying to trap as many retail investors as possible, and that's why I'm speaking so negatively, if you will, on the stock. Company's a great company. The stock is a terrible stock, and you should stay away from it with a 10-foot pole. Nonetheless, let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys enjoy the rest of your day, and I will see you in the next one.